Hello and welcome. You tune into Market Fatafat, where we take you through all the stocks that are buzzing away in trade. I'm Ankita Saxena, and with me, as always, is Snehi Shah. But before we get started with that, Snehi, breaking in right now is M&M with this number. Look at the spike up that's come in the stock. A 2% spike up coming in the stock. Look at the numbers also. The numbers are also, they're a good set of numbers coming in for M&M. If we see the revenue, that's in line. PAT is in line. The margins, however, have given an upside surprise. It's above what we were penciling in. Revenue has come in at 2% uptick of on a year-on-year basis at 30,964 crores. The net profit is up 19% on a year-on-year basis. That is also largely in line with ET Now estimates of 2,964 crores. The EBITDA is up 31% on a year-on-year basis at 4,810 crore rupees, and the margins that has beaten the estimates. That is up 136 basis points on a year-on-year basis at 15.5% versus 14.2% on a year ago period. So that's largely the numbers coming in. A sharp spike up, as we can see, on M&M coming in there. But to get you the review on how the numbers are looking like, let's get on board Ashwin Patil, Head of Fundamental Research, LKP, who's joining us now.
Absolutely. Ashwin, hi, good afternoon. Thanks so much for joining us on the show. Give us your first take on what the numbers look like. Largely, they look like a very decent set of numbers to us because revenue and PAT are in line. But it's on the EBITDA front, EBITDA and EBITDA margins that have beat our expectations as well. Are they above or ahead of what you were penciling in as well? And overall, give us your first take on what you're making of M&M's Q3 numbers.
Yeah, good afternoon. M&M has come out with a robust set of numbers in Q3, and margins are slightly above our expectations. If you look at the segment-wise breakup, then autos as well as farm equipments both have performed stupendously. And if you see, it is the auto business margins are slightly above our expectations because we believed that, since the launches of EVs had happened, and EVs generally do have slightly lower margins, but, still M&M has managed to put up a very good show in Q3. And even on the farm equipment side, we had a good monsoon this year. The reservoir levels are quite high. Also, the Kharif production was quite good because there was no unseasonal rain this year, and because of that, also the Rabi sowing has become strong. So I think the coming quarters also the company will be putting up a very good show on the farm equipment side as well. And on the SUV side, I think both of the segments have come out with great margins at 9.5% margin at their auto business and more than 18% on the FES segment. What else do you want? That is a perfect set of numbers that M&M has come out with, and therefore the stock has also moved up, and we were already having a buy rating on the stock. And we think we'll be revisiting the numbers post the call.
Ashwin, also, we had, like you mentioned, M&M has posted some strong set of numbers coming in there. We had Hero Moto also posted number yesterday. That was also a decent, good set of numbers coming in for Hero Moto. Also, now with the budgetary push, to consumption, and because we are expecting the consumption to pick up first from the premium end, perhaps a big re-rating in the waiting for the auto sector.
Definitely, because Hero MotoCorp is the market leader in the mass or the entry segment. Also, Mahindra and Mahindra, has a very strong presence in the rural markets, where already the rural markets are beating the urban markets. As per the calls that we had, on the auto side, all the OEMs are of the same view that the rural markets are doing great as compared to the urban markets. And M&M, Hero MotoCorp, Maruti, all are having a very strong presence in the rural markets. Even Hyundai, in their recent call, said that the rural market presence is quite strong now. So I think all these companies, I would say the entire auto sector, whoever is strong in the rural markets, the consumption story is quite strong going on because of the budgetary announcements which had happened last week. I think the auto sector definitely is on a strong wicket going forward, because most of the stocks, most of the companies are there in the rural market, and the rural market is quite strong right now. So I think yes, we need to slightly upgrade our estimates as far as the auto companies are concerned.
So much for joining us and sharing with us your first take in the outlook going ahead for M&M. Thanks so much. On that note, we'll let you go. But let's jump over from one earnings to another. Let's now connect with the management of MSWIL, Mahindra Chabra, the CFO of that company, and Anurag Gehlot, the COO, pardon me, of Motherson Wiring, join us on the show now. Good afternoon, gentlemen. Anurag, coming to you first, talk to us about the key factors that contributed to your growth exceeding industry trends this time. How do you see revenue growth shaping up going ahead as well?
So if you see in case of MSL, we have grown by around 9%, whereas the market, the PV market has grown by 3%. So we have outpaced 6% the market. Going forward, if you see for the last 9 months also, the result is almost like same, that we have outpaced the market. Moving forward, we have to see 2-3 things into the consideration. First is that most of the OEMs has already announced their expansion plans, and we are also aligning with that. And these 3 greenfield are in line to that only. We also know that India is the second largest road network, and how the road network is still going on, and in every country the road comes first and the traffic comes after that. So there is also a positivity from that point of view. And this year we have already seen that a slew of new models has been launched by many OEMs, which we talk about in EV as well as in ICE platform. So it's not that that it looks to be a flat market. It's going to be a positive, because when these many expansion has been announced and this much infrastructure is increasing for that, so we see a lot of good positive note to that. For MSWIL moving forward, we always keep to have a sense of breathing with the market. As the customer goes, as the customer request, or they need the change their forecast or their volumes, we are a future ready organization. We are just there that to giving a comfort to customer that we are with our 29 facilities all across India. Whenever, wherever you are bringing a new model or new launches, we are available for them.
All right, Mahinder, what were the key factors impacting your margin performance this quarter? And given your price pass-through mechanism with customers, can we expect margin expansion going forward as well?
So as far as margins are concerned, as an organization, we measure profitability through a KPI, which is ROCE, return on capital employed. So that way we can figure out the overall financial health of the business. And as an organization, we have a guidance, we have a target to deliver 40% ROCE. And we have successfully delivered that 40% plus ROCE in the last 2 years. And as far as current financial year is concerned, if we get the orders as per the forecast given by the customers in Q4, we should be able to deliver more than 40% ROCE.
Okay, point taken. Anurag, with new capacities coming online in FY26, what kind of incremental boost do you anticipate in revenue and PAT?
We have, as I explained, that how the market looks like. As of now, there are new models which have been launched by many OEMs in the country in both powertrain, EV and ICE. And in coming time also, as we have shown that in our press release also, that 2 new greenfields are also going to start the SOP. So there will be new models in those quarters as well. Also, we have to see that when OEMs are giving their expansions and the way the market is growing from year on year, if you see the last 9 months also, they have grown in a single digit only, but there is a growth is there. So it will be, I think it's more of positivity there. It looks that in all the segment, whether you talk about PV, two-wheeler, there will be a growth, and that's what we are making ourselves ready with our 29 locations all across India and the near vicinity of these OEMs.
All right, Anurag, with the numerous EV announcements and the upcoming launches, how do you see customer additions evolving? Any new major win in the pipeline, or any updates on that?
See, when we talk about the OEMs, we are in the country and giving the services to these customers last 40 years. So we are involved with all the OEMs. Whether you talk about on the powertrain, we are a powertrain agnostic organization. In two-wheeler, we have seen there are two type of customer which are well established in India, and we are already working with them. There are newcomers also, which are new generation customers, and for few of them, we are already part of their mass supplies, and few of them we are working at the proto level also. So if you see in totality, we are all working in all the category. You talk about PV, two-wheelers, CV, or even buses, and wherever the opportunity is there, we are working with them. So I think the addition of customer as they comes into the market, they approach us. They know our capabilities also, and we are working very closely with them.
Okay, gentlemen, thank you so much for joining us on the show. On that note, we'll let you go. That was the management of Motherson Wiring joining us and speaking with us about their Q3 and the growth outlook going ahead. But on that note, viewers, time to slip into a very short break on this edition of Market Fatafat, and we'll be right back on the other side. You stay tuned. We'll see you soon.
Welcome back to Motilal Oswal studio. You're tuning into Market Fatafat. Let's get on board now. The management of Greenply that reported its Q3 numbers. Manoj Tulsian, Joint Managing Director and CEO, Greenply Industries, is now joining us. Hi, Mr. Tulsian. Thank you so much for taking the time out and joining us today. The company's profit has declined in Q3 on a year-on-year basis. I can see it's a decline of 9.3% at 24 crores versus 26 crores on a year-on-year basis. Tell us what led to this decline. Do you expect this momentum to continue?
So, Q3 profits, if you are looking at the PAT, it's also because of the joint venture on the Greenply Summit, which has just been under the incubation, and there has been a loss as per the budget only. But going forward, of course, that loss will also come down when you are looking at the PAT level. Last 4 years, we all know that the raw material prices have only moved up, and the whole of the industry have not been able to pass on that entire increase to the market. So that has also been a reason that with the raw material cost increase which takes place, the whole of that has not been passed on to the market. But when you look at Q4 and going forward, I think the scenario is extremely positive from my point of view. Q4, because the volume growth would be much better. So there will be an operating leverage which will be playing. We have taken a price increase in Q3, and we are also taking a price increase in Q4. So keeping all these things in mind, the margin profiles will improve. On the MDF business also in Q3, we had a shutdown. So because of that reason, we were not able to optimize our production and hence the sales. So because of that also, the operating leverage could not really play. So that also will come back in Q4.
Okay, Mr. Tulsian, if you take a look at your margins on a year-on-year basis, they've been rather flat. Could you help us with your margin guidance for the last quarter of this year and also for the next financial year?
For the plywood business, we are looking at double-digit margin, and for the MDF business, we are looking at a margin around 15 to 16%. For the coming year, for sure, though we are doing our budgeting and everything, but for the coming year, we definitely see that the margin profile in both this business segment in plywood as well as MDF will be much better than this year's margin profile.
Right, Mr. Tulsian, how was the volume growth from both segment in Q3, and going forward, what is your guidance for volume growth?
For this year, in Q3, the volume growth in the plywood business was very muted. It's around 2.7% odd. We could have done much better, but we definitely felt the pressure of liquidity into the market, and we could see that collections were a clear sign that there is a pressure in liquidity. In fact, even from dealers who have been paying us for donkey years on time were somewhere delaying their payment from the due date. So that was clearly a sign that there is a pressure on liquidity more than on the demand. And I believe that with the measures what even RBI has taken, and this is going to improve. And once this improves, the demand scenario will also change. Also, one important point, when we look at some lead indicators on the real estate residential units, when you look at some data point, around 3 years back, the sale of luxury and ultra luxury as a percentage of the total volume sales of residential units was only around 10%. Now that has moved to almost around 30%. So these are very good signs for organized players like us. So I think the demand scenario going forward is going to improve only. So is the margins.
Okay, also help us understand what is the capacity expansion plan going forward. What's the outlook on that front?
Just announced our new investments in Odisha, which is setting up a plywood plant, which will be for a total cost, estimated cost of around 134 odd crores. And that will bring in new capacity of almost 13.5 million square meter, which is a 25% increase of my present capacity. Right now, we are utilizing in plywood around 80 to 83%, which by the year end should be somewhere around 85-86% of the capacity utilization. So we are preparing ourselves for FY27 and beyond. As I said that, because of one, the implementation of the BI standards. Second, also, we feel somewhere that the prices of timbers will ease out maybe sometime in FY26, later part of FY26. So that also will be a big boost in terms of the demand side.
Right, Mr. Tulsi, and also can you give us an update on the future hardware JV between Greenply and Summit? What is the growth you are expecting from this JV? Can you provide some more details on this JV?
First of all, this JV slightly in terms of our implementation timelines, a few things got delayed. As of now, when we speak, we have there has been a delay which we have witnessed for 4 to 6 months. Because of which the entire sales plan for this year has actually got pushed. This month, in fact, last month was the first month when we were able to completely produce as per our phase 1 plan of investments. And this month we are having our dealer meets and we are going to showcase all our products. We have also done a few exhibitions in the last quarter. And there we got very exciting response from the dealers. So we are hoping that this coming financial year, we'll get a full 12-month period to go to the market and do our complete sales. Expecting a revenue of anything between 80 to 100 crore is very, very ballpark right now at this point of time. We'll do our budgeting and then we'll come back. Also, after this dealer meet, we'll get a much better sense in terms of how they are liking and what type of order traction we can expect in the near term. But the business is very, very exciting. We feel that this is one business which can be scaled up to anything around 500 crores in the next 3 to 4 years. And the margins are very, very healthy in this business. So at 500 crores, we can reach a margin of more than 25% in this business.
Okay, Mr. Tulsi, and point taken. On that note, we'll let you go. Thank you so much for joining us on ET Now and speaking to us about your Q3 numbers as well as the growth outlook going ahead. From that note, viewers, we're completely timed out on this edition of Market Fatafat from the entire team that put this show together. Thanks so much for watching.